Today, the market got stuck amid the meetings held by the Bank of England and the European Central Bank. In addition, today a lot of important reports were published. The final services and composite PMI data was also among these important reports. The final data slightly differed from what analysts had expected. The Eurozone services PMI dropped to 51.1 points from 53.1, instead of falling to 51.2 points. The composite PMI declined to 52.3 points from 53.3, whereas analysts had foreseen a decrease to 52.4. However, the difference between the preliminary and final figures is insignificant. That's why there is no wonder that markets ignored the data. In the United Kingdom, the situation is a bit different. The services PMI increased to 54.1 points from 53.6, whereas economists had predicted a drop to 53.3. As a result, the composite PMI inched up to 54.2 points from 53.6. instead of sliding to 53.4 points. Notably, traders also ignored the information. This could be explained by the expectations of today's meeting results. The Bank of England is likely to be the first one to finish its meeting. Market participants expect a rise in the benchmark rate to 0.50% from 0.25%. In December, a hike in the benchmark rate surprised markets, and this time it's a predictable event. That's why a jump in the pound sterling is likely to be less significant than in December. What's more, the predictions may fail to come true. The fact is that the Bank of England raised the interest rate just 1.5 months ago, and its results have not been seen yet. The regulator may take such a decision at the next meeting. In this case, the pound sterling may slump. However, traders are much more focused on the ECB's meeting results. It does matter whether the Bank of England raises or not the key rate today. It has already switched to a tighter monetary policy. The US Fed has chosen the same stance. And that's why the ECB may also follow its colleagues. If Christine Lagarde announces a decision to tighten the monetary policy, the euro may start a confident rise. The trend is likely to be intact until the FOMC meeting that is scheduled for March. Notably, the growth could be considerable that the US dollar will drop against all the currencies. Otherwise, the greenback may resume gaining in value. Let us look at the trading charts ahead of the central bank's meeting results. The euro gained 200 pips against the US dollar amid a correctional movement. As a result, the price returned to the resistance area of 1.1270 and 1.1320, where the volume of long positions dropped. Although the euro showed a considerable jump, the midterm trend remains downward. Under the current conditions, the price may harbor within the resistance zone of 1.1270 and 1.1320. However, the situation may change amid a surge in speculative activity caused by the news flow. Trading recommendations are the same. The price may accelerate after a break of one of the control levels. The upward movement will continue if the price consolidates above 1.1330 on the 4-hour chart. The pair will stop its correction if the price fixes below 1.1260 in the same period. In the last 4 days, the British currency added 220 pips, thus approaching the resistance level of 1.36. Such a jump could be explained by traders' interest in speculative operations amid a flow of information. Earlier on the daily chart, we noticed a signal of a gradual recovery in the bearish interest. Since the correction is longer than expected, the signal could be considered a false one if the price consolidates above 1.3600. Under the current conditions, long positions are overheated. The level of 1.3600 may act as resistance, and this may contribute to a gradual recovery in the bearish interests. Notably, traders may ignore the overbought conditions ahead of important events. In this case, the price consolidation above 1.3600 may lead to a further rise. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.